All right, what is up, everyone? I'm here to bring you a very important update on Bitcoin. This video is going to be jam-packed with a bunch of very interesting things that you need to be aware of in order to understand what is going on with Bitcoin. So in this video, I'm going to run through some tactical analysis, talk about what I see happening both short-term, long-term, mention some news stories, and some off-chart fundamentals that you need to be aware of. So if you like the sound of that, I want to ask you to do me a favor and do yourself a favor. Like, subscribe, comment, share, hit that bell icon to be notified of new uploads. So let's delve into this, folks. There's so much to talk about. I hardly even know where to begin. But why don't we just start off trying to kind of explain the short term and what I think is relevant in terms of trying to understand what Bitcoin is going to do in the short term here. And again, it's always important to follow and understand Bitcoin because Bitcoin leads the rest of the market, will have an effect on the altcoins. So we've been getting rejected off previous all-time highs at just over 57,400 acting as resistance. Now you could say, okay, that's obvious, previous all-time highs, and I get it. But isn't it interesting how we found rejection exactly off a resistance line based off these 1, 2, 3, 4 wicks here? If we just extend that line, that is exactly where we found rejection. And based off these 3 wicks here, if we extend a support line, that's exactly where we're finding support. So this channel from back in February is, I believe, has some bearing on what's happening in the short term. So understanding what way we break out of this narrowing channel, I think will be very helpful for understanding what could happen with Bitcoin in the short term. Now, I've drawn a Fibonacci extension level that I do believe will be helpful moving forward to understand what Bitcoin can do in the short term based off the bottom of the impulse to the top to the bottom of the retracement. Then we get some fib levels that are likely to be relevant moving forward. Now, we've gotten rejected off all-time highs. If we make that lower high, then I think entering, perhaps another leg down, some kind of consolidation phase is likely, where we can see back here, back when we pumped and dumped, we made a lower high and then had one final sell-off. So something like that could be possible, especially if we don't make a higher high soon here within the next, few days, 2 or 3 days, I'd say. Then something like an extended pullback becomes more likely. Now, let's say we do fall back here. I think kind of our first floor of support is $54,000. We can see there's a nice spike in volume in these regions, and based off this candle body, this was a price reactive level here. If we zoom in here, we can see a bit better how this was kind of like a price reactive zone, especially if we extend that a bit here. This was a price reactive zone, so I do think that's kind of where we find support, and of course this green line here. So these 2 green lines here, I think, are kind of the first floor of support if we do have that more of an extended correction. Aside from that, I do think $52,000. We have our fib level right there, and if $52,000 doesn't hold, then I think kind of $50,000 is our next leg of support. Nice psychological level, as well lines up with one of our fib levels pretty closely. But what I think is the most important support level for Bitcoin moving forward, the support level that I think will be very helpful in trying to understand when this bull market is over, because I do think we're in a bull market, but at some point I think there's a good chance that this bull market will end. Now, there's arguments that these cycles are being extended. Crypto typically moves in these 4-year cycles, boom and bust cycles. There's arguments that with the institutions in, we're going to enter some kind of super cycle, or that the cycles aren't relevant anymore. But I do believe the cycles are relevant because if we zoom out historically, the 50 simple moving average on the daily is the most important support level for Bitcoin, because last time we pumped and dumped, we found support exactly there, and that's exactly where we started pumping. And if we zoom out to the previous cycle, we can see why this support level specifically was so relevant. I sorted through the different time frames and looked at different simple moving averages and exponential moving averages, and I believe the 50 simple moving average on the daily is probably the most helpful one for understanding when the previous cycle's bull market ended, and maybe even more specifically when the bear cycle started. What we pumped and dumped here, and we found support on the 50 simple moving average. As soon as we broke down below, we went back up to test it, and we got rejected, and that was the start of the bear market. So historically, last cycle, very relevant support level that very closely hugged the bull cycle. As soon as we broke below, that was the beginning of the bear cycle. And even to this day, we can still see how this line, this support level, is relevant to this day. So this is the most important support level for Bitcoin. Now, another thing I really want to mention, which is you see how I have kind of like these things, these lines here. They're called pitchforks. These channels I got going here, they're called pitchforks, and I leave them there, and I think they're relevant because I've been using them to try and understand when local tops for Bitcoin might be. I think they're very helpful for understanding when a local top may be, because we're in a bull market that I think is likely to end sometime near the end of this year, and we'll delve more into that. But whenever we have a massive run up, and just actually before I move into that, we typically, according to the last cycle, have Bitcoin usually has these 30 some odd percent corrections throughout the entire bull run. Last time it had about 6, that depending where you count it, about half a dozen to a dozen, 30 some odd percent pullbacks in a bull market is common. And so whenever we're having this massive run up, we understand that something like a 30% correction could happen at any point, especially once we have a massive run up. Well, I think drawing pitchforks near the top of impulses when we're overextended can be very helpful for understanding when we've reached local tops. Because if we zoom out here, or zoom in actually, if we see the bottom of this impulse, if we draw a pitchfork on the bottom of this impulse to a local top and then the retracement, as soon as we broke below our pitchfork and we actually went back up to retest it and got rejected, as soon as that happened, that was the local top for Bitcoin and we started breaking down. So drawing these pitchforks when Bitcoin is overextended and we can anticipate a possible 30% correction, I think is very helpful for kind of timing those corrections and those local tops as well. The previous pump and dump we've had, the previous top, again, this pitchfork was useful. Now you can draw it different ways, but either way, I think it tells the same story. Bottom of the impulse to the top and then retracement, as soon as we broke down from this pitchfork when we were overextended and possibly anticipating a pullback, as soon as we broke down from this thing, that was the end of the upward momentum. So drawing these pitchforks when we're overextended and possibly anticipating a pullback, I think is going to be very important and very relevant moving forward once we enter price discovery and we're trying to gauge when the next top for Bitcoin might be. Now, let's say we tackle all-time highs. Based off these fib levels, I think Bitcoin has a good chance of tackling $61,000. Now, of course, $60,000 I think is going to play is going to act as some kind of resistance because it's a nice psychological level. It's going to act as some kind of floor that we need to get above, or some kind of ceiling rather. But let's say we get above 60 based off some fib levels. I think 61 is probably our next stop, and aside from that, probably 66. Once we're entering price discovery, then we'll let's look at the price action again and see if something else makes more sense. But that's what I think is the most valid. Currently, these are kind of the major support levels that we need to be aware of. Now, I want to bring up some off-chart factors that you need to be aware of, should be aware of, in order to understand how this bull cycle is progressing and whether we're in danger of reaching some kind of cycle or local top. Now, one chart that I think is very helpful for understanding the state of the market is the net unrealized profit and loss chart from Glassnode. They should really sponsor us because we're sending a lot of people their way. But look, folks, this is a very important chart. So whenever we enter this blue euphoria zone, essentially means too many people are making too much money too fast, and there's a lot of people sitting on unrealized gains. And whenever there's too many people making too much money too fast, sitting on unrealized gains, that uptrend is very unsustainable and very precarious. So this has historically been very good at calling local and cycle tops. So until we enter the blue euphoria range, I'm personally not worried that we've entered some kind of local or cycle top. Now, it's just one factor, right? Like, you got to look at multiple different things. The more factors you can look at, the more confident you can be of direction. And different factors are different. Carry some different weight behind them. But point being, this is a very important chart that we're going to be talking about on this channel and in our Discord group. Link to join our Discord down in the description below. If anything interesting happens with this thing, we'll definitely be talking about it here, so stay tuned, folks. Another very helpful chart for trying to understand tops and bottoms to market cycles is the Bitcoin realized hodl ratio. This is another chart that, if we look historically, has done a very good job of gauging the top and bottoms of local tops and cycles. So until we reach or go near this red range here, I'm not worried that we've reached any kind of local or cycle top. Now, I thought I had it pulled up. I didn't, but that's okay. One very important chart that I've been looking at to try and understand what Bitcoin can do over the long term is a chart by Trading Shot. So Trading Shot did a very good job of breaking down the Bitcoin cycles, and we don't need to look at it. I can very easily describe it. So Bitcoin essentially moves in these 4-year cycles because of the Bitcoin halving. So for those who don't know, roughly every 4 years, the amount of Bitcoin being produced gets cut in half. And so miners eventually, after a certain amount of time, have to start selling Bitcoin at increased prices in order to remain profitable. So it's almost a guarantee, nothing's guaranteed in this world, but it's almost a guarantee that Bitcoin has to increase in value over the long term, over many years, because of the halvings. And based off the last halving we've had, Bitcoin is likely to reach its peak late September this year. Now, it's just one factor. It's one data point. It's not the end of the world. And if you want to look, if you want to understand the chart I'm looking at specifically, join our Discord. Link for that down in the description in our resources section. I have posted that chart. It's my trading shot. It's the golden ratio, the 51-41%. Ratio, where essentially from the bottom of the bear market to the halving is typically 51% of the entire bull cycle, and from the halving to the top of the cycle is typically 41% of the entire cycle. So based off the last halving we've had, Bitcoin is likely to reach some kind of peak late September this year. And given that the cycles have played such a large role in Bitcoin historically, I do believe that they're likely to play some kind of role moving forward. Again, there are arguments that the cycles will be extended, that the cycles are no longer relevant because crypto was an immature asset class, an immature market. Now that there's more money, things won't act in the way they have historically. And look, I'm open-minded to all those arguments, but to completely throw away the cycle theory out of hand, I believe is very risky, and I'm personally don't think there's enough evidence to completely throw away the idea that crypto moves in cycles quite just yet. Again, I'm open-minded. I'm not, I want to have my mind changed. I'm open-minded to any new evidence that comes my way, but I do think this market is likely to reach some kind of end at some point, likely near the end of this year, likely in September, October. So let's keep looking at some important factors to try and understand what the market could do next. Now, one chart that I've been trying to bring up more and more is this chart on crypto quant. It's the all exchange whale ratio. So this is the amount of Bitcoin moving onto exchanges. So whenever there's less Bitcoin on exchanges, that lowers the supply and alleviates some selling pressure, and can typically be interpreted as a bullish factor. So right now we can see that the amount of Bitcoin on exchanges is at a low point, a relative low point, which could be interpreted as a bullish signal that will allow Bitcoin to continue pumping over kind of the next few days and weeks here. And if we look at this chart as well, we can also see how the amount of Bitcoin on exchanges is at a relative low point. So actually very bullish thing to see. Another incredibly bullish catalyst that you guys need to be aware of is the Americans are passing $1.9 trillion in stimulus. This is a big deal. It has passed the Senate. It has passed the House. It now needs to be signed by the American president, Joe Biden. They're planning on signing this Friday. Folks, this is a massive, massive deal. Let's zoom out on the Bitcoin chart here, and we can see back in, when was it? It was March, back when the global disease originally hit. I'm trying not to get demonetized here. We can see the market had a very bad month. We corrected quite a bit, and I forget when exactly stimulus passed. I really do forget, but that was a very large factor that helped the market recover. It was the talks of the stimulus and the stimulus passing, and and a lot of people putting their stimulus money into Bitcoin. I've been reading a lot of stories about people who put their I forget what it was, $1,200, $1,400, whatever it was last time, 2,000, I forget what it was, who put their stimulus checks, the Americans who got stimulus checks, who put them in Bitcoin and put them in Cardano, and they've made tens of thousands of dollars. So, I'm not saying it's going to happen, and I'm not a financial advisor. These are not financial advice. These videos are just, where I express my opinions, that's all. But bottom line is, this is an extremely, extremely bullish catalyst, no matter what way you slice it. We're essentially talking about here about the extent to how bullish this is, whether this is a giant deal or only a very small deal. Either way, this is literally a conversation about how incredibly bullish is this exactly, because this is a massive, massive catalyst. The market is extremely likely to react off this, whether it gets delayed or if it gets signed. And folks, this Friday, this is a big deal. Whatever happens with this thing, very likely to have an effect on the market. Now, something else that's very important to look at to try and gauge what Bitcoin can do, and it's always important to look at Bitcoin and understand what it can do because it's going to have an effect on the altcoin market, is the dollar index, the DXY. There's almost a direct inverse correlation between the dollar index and how Bitcoin behaves. So whenever the dollar rises, other currencies typically suffer, including Bitcoin. And whenever it falls, other currencies, including Bitcoin, typically benefit. So we've been rallying and pumping quite a bit as of late. But we're running up against all this sideways price action, which is above us, which will act as resistance, not to mention the 20 exponential moving average on the daily. So I believe nothing has fundamentally changed to make the dollar stronger. In fact, I think things have changed to make the dollar even further weaker because the Americans are printing trillions of dollars, which is devaluing the dollar and inflating stores of value such as Bitcoin. So I think it's just a matter of time before we continue to see that leg down with the dollar index. And once we continue to see that, that is going to be a factor that helps crypto and Bitcoin in the market continue to pump. So very important chart to look at moving forward. As well, the Bitcoin dominance chart. I always mention this thing as a very important chart to continue looking at. So for those who don't know, Bitcoin dominance is the total value of Bitcoin in comparison to the total value of all cryptocurrency. Whenever it rises, altcoins typically suffer. Whenever it falls, altcoins typically benefit. This is a very good gauge, a very good temperature check of the altcoin market. We've been flirting with the 60 percentile range for quite a while. Once Bitcoin dominance falls below 60% and breaks below 57%, that's when I think we see altcoins truly start to fly. Now, something to know. If Bitcoin starts to reach its all-time highs and enter price discovery, I believe that is going to place a temporary damper on the altcoins for a few reasons. The money's moving. A lot of the disposable money flows into Bitcoin, okay? And also all the pairings are affected, and the pairings have an effect on the US dollar value of whatever coin you're looking at. So for example, Cardano. If Bitcoin starts to enter price discovery and starts to really pump, that's going to affect the Cardano Bitcoin pairing, and the Cardano Bitcoin pairing plays and has some influence on the US dollar value of Cardano. So Bitcoin pumping in the short term places the dampers on the altcoins, but over kind of like the mid to long term, it's actually a very good thing for the altcoins because Bitcoin is a leading indicator on the regular market, on the rest of the market. Bitcoin pumps first, and typically altcoins see the majority of their growth really after. An exercise that's extremely interesting to try and understand how crypto works is go to CoinGecko, and on the right hand side, if you're on the web browser version, I don't know if it shows you on the mobile version, but you'll see how they display to you the different charts, the different price action of every chart. And what you'll notice, you'll see a lot of these different charts for these different coins. The chart looks super similar. A lot of the price action looks very similar. And, depending on the coin and the project and the news surrounding the individual coin, there will be varieties and differences in the price structure. But what you'll notice is that oftentimes, a lot of these different coins' price structure look extremely similar. And that's because, folks, we're more so trading a market than any one coin, and it's because and Bitcoin leads the market. So Bitcoin exploding quickly will in the short term likely can place the dampers on the altcoins, although they can continue to pump, although we're very likely to not see giant altcoin growth until Bitcoin kind of cools off and just kind of moves sideways and doesn't do anything too crazy. That is when we see altcoins really start to take off. So excuse me. So I know I threw a lot out there, but before we finish off here, I think I'd feel bad if I didn't mention kind of the art indicators here on Bitcoin. How could we not, folks? This is a technical analysis channel. We got to look at our indicators. So a few things to mention here. We've had a bullish crossover on the daily MACD. Very good to see. Everything on the daily, well, I was about to say everything on the daily looks bullish, except I looked at the RSI. The RSI does not look bullish. The RSI, in fact, looks very weak because we are getting lower highs in price action paired with lower highs in RSI paired with higher highs in price action. And whenever we get lower highs in RSI paired with higher highs in price action on a macro time frame like that, it's very bearish because it's telling you the upward momentum is running out of steam. Now, we can continue to pump and be overextended. We can continue to pump and have some factors pointing towards some bearishness. This market doesn't always react logically, to say the least, but this is a concerning factor that could lead us to have a bit of a correction here in the short term, especially because the RSI seems to be forming kind of like a wedge here on the daily. Ooh, yeah, look, I'm very glad I brought this up because I can very clearly see a wedge forming here on the RSI. Let's say something like that, right? And then based off these two tops here, yeah, see, we're very clearly forming a wedge. So maybe like if we don't form a new all-time high soon within the next few days, we're probably gonna have that bit of leg down here on the other side. But whenever we touch this this support line here, this green support line on the other side, that's probably where we find support and price action. So whenever the RSI happens to retest this green line, that could be a local floor, a local bottom, and perhaps one factor to know where the dollar cost your average away into Bitcoin if we touch this. So whenever we break out of this wedge in RSI, I think that will be the next major move for Bitcoin. So if we start to see Bitcoin, the RSI break out of this red resistance line, I think that is when we tackle all-time highs and price discovery. So following the RSI on the daily is going to be very important to understand what's going to happen moving forward. So the daily having that bullish crossover is good, but I'm seeing some concern. I'm concerned. I'm seeing some weakness here. Stochastic RSI overbought. I'm not liking that. It's curving down. It's overbought. So the MACD does look bullish, but we're not getting a strong confluence of reasons here. So let's take a look at the 12 hour. Yeah, histogram starting to move down. Let's take a look at the 6 hour starting to move down, and let's take a look at the 1 hour here. The 1 hour, okay, so the 1 hour is starting to see some strength here, so that's good to see. So yeah, the 1 hour is looking strong. So we really need to see a higher high within the next few days, or else something of a leg down, of an extended pullback here. Maybe something similar to this kind of movement. Maybe we don't fall that fall. There's tons of support below us. The market's very bullish long term, but again, if we don't get that higher high within the next 2 or 3 days here, I would say we're probably due for some kind of further extended leg down to one of these support levels, in my opinion. So, folks, that's what I think is going to happen in the short term. You already know what I think is going to happen in the long term. I'm selling based off time frames, not so much price targets. Come September, October, November, that is when I'm looking to scale out on my long-term positions, regardless of price. These, are some of the most important news factors in on-chain things that you need to be aware of. So, folks, if you like this video, do not forget to like, subscribe, comment, share, hit that bell icon to be notified of new uploads. I'm sure you guys can tell I'm running out of breath here. But look, I like talking about this stuff. I enjoy it quite a lot. So, folks, stay tuned with us. If you like what we do, you want to support us, join our Patreon link down in the description. You'll get access to our VIP Discord group, where we talk about low-cap gems, interesting setups, and extremely helpful resources. I really cannot understate. I mean, I'm sure a lot of you probably won't sign up because of the resources, but like the resources are very helpful. So check that out. As well, join our regular Discord. We have posted tons of helpful resources, both technical analysis. We post news there. We talk to our Discord members regularly. And moving forward, we're going to try and have more regular coin calls with our Discord, where like exclusively just for our Discord members, we explain our thoughts on what's happening with the market, run through some major news stories, some major catalysts, and answer some questions. So we're going to try and do that every weekend, every other weekend. So folks, join our Discord. Thank you so much for watching. Until next time, take care.